It is time to talk personal finance thanks to our partners Forsyth Barr. And the topic du jour this morning are the current high S&P valuations driven by the tech stocks, driven by the AI boom. Are we heading for a dot-com style bubble burst? Here to discuss, Mark Richardson, investment advisor at Forsyth Barr. Mark, good morning.
Yeah, morning, Ryan. It's I've been hearing a bit of it actually. There's a fair amount of angst out there and comparisons being made, and I don't want to turn up today and say it's not the case and quell all the angst, and because and I can't turn up and say, well, who knows? Because I'm sort of meant to know. But if you actually take a step back and have a look at some of the fundamentals, it is different this time.
Yeah.
Yes, there is this AI craze. Yes, there's a lot of money being tipped into it, and yes, the valuations are pretty high. But when you go and look at let's say, the profitability and the fundamentals of the companies that are driving these prices at the moment, your big hyperscalers, your Amazons and your Nvidias and Microsoft and the likes, compare them to the companies that were driving the dot-com or the 2000 tech craze. Very, very different. These companies are turning a profit, they're profitable, they have got very, very healthy balance sheets. Go back to 2000 and it was all hype and speculation and potential, and that's probably one of the biggest differences. The second difference is that we now, in 2000, the whole tech industry was new, it was young, the internet was young. Now the playing field's developed. And the tech sector of the economy is well embedded and well set. It's there, it's growing. The infrastructure is different than it was back in 2000. So, sentiment could drive some prices down. The big thing is that these companies have got to continue to deliver on their earnings momentum.
They do.
Yeah.
The fascinating thing about it is that there's only a couple of really big ones, and they move entire markets. They're that massive.
They are, but then you've got to go, okay, well, there's more than one way to play this. You've got these companies, they're moving the market, but they are turning profits. They are healthy companies. All right, who there then, if you're worried about that, if you feel that they're overpriced, and actually when you have a look at the price to earnings multiples, they're not actually overinflated compared to what they were back in 2000.
Right.
But you go, okay, well, who are the companies that are actually going to benefit from this? Who are the companies where there is some value? Where are the companies that the market hasn't realised that they have the potential and will start to grow their earnings? And those companies start to actually go, hey, here's this wonderful, here's this wonderful opportunity we have. Now let's start to actually turn it into profit. Once some of these companies that can grow and can really use technology to grow their earnings, we might actually see a wider base of companies driving the market as well.
And then potentially, well, presumably, they would make up a massive part of the whole world economy. Do you know what I mean? Like if it takes off like they say it will, this is going to be a massive part of global commerce.
Well, and that's the other question. You might say, okay, is this a bubble or is this the fourth industrial revolution?
Yeah.
And I think everyone right now has an opinion, and opinion's probably split. The other side of it is that there's different styles of investing as well. So even if you are worried, even if this is, you feel prices are overinflated, there are other companies that you can invest in that we might call value companies where the market hasn't realised the value. Other industries, like the healthcare industry, that is probably undervalued at the moment, has been a little bit unloved. These are wonderful companies providing wonderful products to the health industry, which you go, okay, well, at some point in time, the love's going to flow their way. So
yeah.
I think it's just a case of you've got to be invested. It's just you might want to make sure that you are, once again, well diversified.
Diversified,
right?
Yes, diversity. You've never talked about diversity more than since you've had this gig.
Diversification, right?
Good to see you. Investment advisor at Forsyth Barr. That is Mark Richardson, and we talk personal finance every week thanks to our partners Forsyth Barr.